Well, I'm delighted to be speaking today with Francois Deswarte, who is the founder of Swiss Private Finance. Welcome, Francois.
Thank you for having me, David.
So great to see you today. You've been a PCD member for a little while now, but those people who've not had the chance to meet you or hear more about Swiss Private Finance, why don't you give us a little sense of your background?
Yes, of course. I've done about 20 years in the banking industry across Europe and the US. And 4 years ago, I decided to leave the banks because I think I was a little bit tired of the banks. And I decided to start a company called Swiss Private Finance, which is a credit broker focusing on the credit needs of high net worth individuals.
Okay, great. And what are some of the key jurisdictions you tend to work with for private finance?
I would say jurisdictions based on the client's residence, it's across the world. I'm having cases right now with clients living in Japan or living in South America. There is no limitation. The only limitation in jurisdiction is when we talk about real estate finance, the property would have to be located in Western Europe. That's the only area that we cover. We wouldn't be able to arrange, for example, a mortgage in Africa or in the Middle East for the moment. So, but for the rest, we cover pretty much all jurisdictions.
But it might be, London real estate, south of France,
Absolutely.
Swiss chalet,
Absolutely.
Italian property. Are these the type of assets that is typical?
I think the most active countries in terms of real estate are number one, Switzerland, obviously, because we are based in Geneva. Number two, France and Spain, and also pretty much UK. A lot of UK. Except that in UK there is a lot of competition, as you can imagine. But we also have a few cases in the UK because it's a very active place for investments, property investments.
And for cross-border investors, are you working the security over the asset itself, if it's real estate, but also are people looking at the bankable assets? And how might you put a kind of credit deal together where it's a cross-border investor looking at south of France, for example?
Yes. So to take an example like that, let's say it's a client living, I don't know, in Dubai, for example, and wants to acquire a secondary residence in Saint-Tropez, let's say. Then our primary focus would be probably to work with the Geneva private banks. Who are very keen to do this kind of mortgage finance. And they would ask the client to deposit some asset under management with them to make the relationship worthwhile. And not only it's good from a relationship standpoint, but it allows some of the client to have 100% financing. I.e., if you if the property purchase price is, say, 10 million, you can get a loan of 10 million from the bank, like 5 million based on the real estate itself from mortgage and 5 million based on the pledge on your portfolio. So these are some examples where it's cross jurisdictions, and also you have several type of assets that you can actually pledge to get the best possible conditions.
And do you also put finance deals together looking at other assets? So if the client has, I suppose a listed position, or there's some or other alternative assets that are illiquid and they need some liquidity. Do you
Absolutely.
commonly?
What makes Swiss Private Finance special is that we are probably the only credit broker in Europe to cover all asset classes for individuals. So it's mainly 4 categories. The first one we touched upon it's the real estate, which is about a third of our pipeline, roughly. The second is anything which is financial assets, like single stock, hedge funds, or stuff like that. Keeping in mind that we're also now arranging loan against cryptocurrencies. The third category is lifestyle, mainly jets and yachts. And the fourth category, where we are becoming more and more active, because the private banks are not in this area, are mainly what we call collection. Could be art, classic cars, watches, gold, antiques, wine, stamps, coins, anything which has a value is actually, there is always a solution on the market. And to give you an example, 2 days ago, I was approached for a loan against an asset I never heard about, which is rhodium. I don't know, have you heard about rhodium?
No.
Never heard. I looked on internet, and it's actually a very expensive type of metal. And I found already 2 lenders who are happy to take that as collateral.
Wow.
So my point is, as soon as there is a market value and some liquidity, there will always be a lender that will be interested to lend against this type of assets. So, and like I said, the private banks are not active in these areas. So we have a lot of requests for these.
And just coming through some of those assets then, I mean, on the single stock lending, there might be a client with a bank in Geneva that just doesn't have a competitive offering in that. Might they come to you to say, well, we've got the bulk of the portfolio, the liquidity is actually going to help our role. Do you find the bank brings you in to actually assist?
Yes, absolutely. Yeah. Because the banks, and I know that well because I've done that for a lot of years, the banks have, for single stock lending, they have certain criteria, mainly around minimum market cap and minimum daily liquidity. And if the client has a single stock which doesn't meet the criteria, there is no way we'll get a loan from a private bank. So then he needs to have some access to alternative lenders, which are much more flexible for this criteria. They can lend with very decent LTVs, like 50, 60%, against positions which are not very liquid. And for almost all stock markets in the world, obviously some difficult stock markets they won't access, but others, yes. So in that case, I have a call either from the private banks or from the client saying the doors of the private banks are closed, can you help? And we have a case right now for a stock listed in Lithuania, which is quite an exotic market and not a big market in terms of capitalization. And we have found a solution through an alternative lender based in Singapore, a private lender based in Singapore, who we know likes single stock lending and who has a significant appetite.
Fantastic. And on the crypto front, I mean, this space crypto has come up in so many of my conversations last few days.
Yeah.
But essentially, lending on crypto must be a very interesting space because people have got paper gains, and they're looking to turn that into real assets. They don't want to sell the position because of the way the market is moving. So what does a crypto lending deal? How does that kind of tend to look? Crypto
lending deals, first of all, it's not a market for the moment for private banks. The private banks do not touch cryptos at all. They are very shy about this product, and I can understand why, because it's very speculative. But you have a lot of alternative lenders who understand and are comfortable with cryptos, and they offer loans against, I would say, probably a dozen of different currencies, Bitcoins, Ethereum, or Litecoin, or a lot of different cryptocurrencies. They lend against them with 50 to 80% loan to value. And the rate will mainly depend on the loan to value. Actually, for 50% LTV, you got loans at 5-6% per annum. If you are more aggressive in LTV to say 80%, then you will borrow more around 10-12%. So there is absolutely appetite. If it's a small amount, usually the client do not necessarily need us. But if it's a big amount, or if it's a structured product based on crypto, then they need to find alternative lenders, which are not necessarily known or like debt funds. But it's really a quite interesting market. And at the same time, we are also developing something which is quite similar, which is loan against NFTs.
Wow.
So we have now some clients who own NFTs and they want to raise liquidity because they want to absolutely to keep it. They don't want to sell because they think it's not the right moment for whatever reason. And we try to find liquidity providers against their NFTs. Quite expensive, more than 10% per annum, but that's obviously due to the volatility of the underlying.
Well, parallels, I suppose, with the art, you were saying in your collections line, NFTs and art lending is very similar, isn't it? I mean, a lot of NFTs they're sold by the auction houses. It's an art, real art industry kind of product.
Absolutely.
So, I mean, how do you, on that art lending side also then, how do you put deals together in that space, whenever I've looked at it in the past, there's a lot of questions come about. Can the client keep it on the wall? Can
True.
they, there's lots of logistical questions, aren't
True.
there, that come off the back of the security?
Yes. Okay. So to answer directly to your question, can the client keep it on the wall? Sometimes yes. It all depends on the client's residence. For example, if it's in the US, for example, yes, it's possible. In most countries in Europe, it's not possible. That's why usually the lender will try to keep the paintings or the sculptures in a safe place. Typically in Geneva, they use the free ports.
Yeah.
Probably heard about them.
Absolutely.
So, or it could be in London, it could be in a special warehouse or stuff like that. But it's rare that the client is in a position where he can keep the art at home. Usually he has to give the art to the lender, and the control of the work of art by the lender is a critical factor.
But at least it allows them to keep the asset, create the liquidity. There's conditions, but
absolutely.
there's a
So
use for it,
we have some clients, they do not want to sell because they think it's not the right time. And some clients, they want to sell, but they want to have a certain time to do it. They want to take 6 months or 1 year in order to find the best potential buyer. And in this case, in both cases, they need some liquidity. So either long-term loan or a bridge loan. And it's possible to get an advance from the sale proceeds from different lenders, mainly based in London.
Yeah,
most of them are based in London.
Are the banks active, or who provides the finance in that very specialised field?
We have a few private banks which can do art finance. I would say probably 4 or 5 private banks, but they don't do it very often. They don't do it very often. They do it maybe once or twice a year. I know that because I used to do some in the past. So there is some appetite, but it's quite limited. And they don't necessarily have the expertise to value the work of art or to assess provenance and authenticity, stuff like that. So usually when it's about art finance, I tend to go to the specialized lenders because they are much quicker in terms of turnaround compared to the private banks.
And finally, on the yachts and jets, on those kind of private assets, there's been lots of change in trends in travel and leisure around these assets for the ultra high net worths. Have you seen that feeding through into the finance deals? More transactions, more need for financing on these kind of assets?
Yeah, absolutely. Post-COVID, wealthy individuals tend to travel more and more through a private jet or through a private yacht. And so I would say it's about a third or 40% of our pipeline is yacht and jet finance. So we have a lot of demand, especially from Middle East. Especially from Middle East because the banks who are doing this type of finance are based in Europe, but they are known in the Middle East. So we have a lot of Middle East clients who approach us because they need to finance their acquisition or to do an equity release. And then they come to us to find lenders to get a loan to acquire their yacht or their jet. But it's a very important trend in the market.
And what are some of the biggest challenges about getting deals away at the moment? Is there some, in the global macro environment, there's a lot of uncertainty.
Yes.
Economic turmoil, war, lots of factors. What do you find are the most challenging things about getting things done today in the credit space?
Like I hinted earlier, for most of the assets, it will always be possible to find a lender, even something very exotic. It's just that there is a price linked to it, in the sense that, yes, I can find a lender against rhodium, to take that example, or against a coin collection, for example. But that's going to be expensive because they are taking certain risk. They expect certain return for themselves or for their investors. So I would say the biggest hurdle is when I come back with a solution to the client and I say the rate is going to be, let's say, 1.5% or 2% per month. And it's for most of them, they are not prepared to hear that. And that's something really difficult to swallow. So sometimes they just push back saying, no, we'll never pay this type of rate. But unfortunately, for certain exotic assets, that's the only way you're going to get a deal done. So it's, I would say the hurdle, so I try to anticipate that as much as possible. And I try to say to the client, this is what you should expect in terms of LTV and rate for the loan you are considering. But even there, when I anticipate, some of the loans are just too expensive for the clients. They're not willing to pay 2% per month. Even if it's short term, even if they know it's only for 6 months, they're not willing to pay that high. So I would say that's the main hurdle for me is for the client to accept the certain terms.
Because I guess we've been in an era of cheap money, quantitative easings driven down global rates. People look at headline rates and think, oh, well, how expensive can it be? They've become accustomed to lower rates. So, I mean, what do you, and just stepping back, looking at the macro picture, you know, if debt is very cheap, people think, well, it's a no-brainer to take the leverage. But what do you see as the outlook if rates do start creeping up? What's going to happen on the private finance market for high net worth clients?
The clients will always look for the cheapest possible rate, obviously. So that won't change. They are not more demanding or less demanding than before. What changes a lot is their requirement for a fixed rate. So sometimes we come to them with a 3-year or 5-year solution with a floating rate, and then they're not comfortable because it's Euribor plus or Bank of England based rate plus something. And they know that the rates are likely to increase over the medium term. So most of them, they come back and say, is the lender able to provide a fixed rate for 3 or 5 years? Because then we'll be much more comfortable. So this type of request we didn't have in the past. Clients were very
people felt confident that rates were going nowhere.
Exactly.
Whereas that narrative has certainly changed, hasn't it now?
Absolutely changed. And now the client, they tend to systematically ask for a fixed rate solution, if possible, in order to make sure they don't take any interest rate risk.
Fascinating. Well, look, Francois, great to talk to you today. Look forward to seeing you this evening and look forward to sharing this with our members.
Thank you very much, David.